Happy New Year, guys. Just wanted to do a video um only because it's the start of the new year. It's not a new trading week, but I just wanted to address some concerns as it relates to the week of trading. Um, the the important thing that I want you guys to remember is that although the monthly candle has expired, okay, the weekly candle is still in use because you still have one more year. Oh, I'm sorry, one more day to go. So before we begin, let's just pray. God, thank you again for your blessings. Thank you again for a new year. Lord, I ask that you just continue to be with us. Help us to continue to be successful and be to anyone watching this video. May we all succeed together. We pray. Amen. All right, guys. So let's look at it real quick. So here we go. The monthly candle, which is where I'm at right here. Let's just take this off. You'll notice that the monthly candle expired yesterday. Yesterday being the 31st of the year. That's the end of the monthly candle and also the yearly candle. So every candle from the 12 months all the way down to the 1 month expired yesterday. Now, the other thing that I want you to look at is that the daily candle also expired. Okay, so the daily candle expired yesterday on the 31st. And everything below the daily candle, all the way down to the 1 minute candle, expired yesterday at 4:59, as it was a full trading day. Okay, here's the unique thing about this year as opposed to last year. Last year, the final day, I believe it was the final trading day, I think was on Friday or something. Don't quote me on that. The thing is, the 31st fell during the middle of the week, which means the weekly candle still has one trading day to go because the market is going to reopen later on at 6 p.m., depending if you're trading futures or not, or 9:30 tomorrow if you're trading the full New York session. So you still have one full trading day left on the weekly candle. So that is why this year is special, because everything does not line up. So the weekly, the monthly, everything did not expire at the same time. The weekly candle still has 24 hours to go. That's why when you look at your weekly candle, you'll see here it has 1 day, 5 hours to go. Okay, before it expires. All right. So that's the key thing. Now, there's something that I wanted to point out to you, which I'll get into more of in my weekly review, my weekly analysis video for next week. But I just wanted to touch on it briefly so you can actually see. Now, I did analysis right here so I could show to you. So the 2 hour yesterday actually finished at a low, a new low. Okay, it's an oversold low. Here's the cool thing about that. When you look at this oversold low, it's higher than all of these lows right here, these two lows right here, which was this double bottom right here. And you notice every time the market actually bought from this low, it went up, it made a high. Every time it bought from this low, it went up, it made a high. This low finishing higher. Okay, I'm expecting it to do the same. Now, at least if the market goes up and makes only a lower high, then you take your profits and you wait. Remember, that is the rule. We buy from our largest higher low, and then we take our profits at the all-time high, which would be a break of this level right here, or we wait for the market to actually come down and make a new higher low from an existing lower high. All right. So that's important right here. Now, when you look at it, you'll also see that the 23-hour expired yesterday also. 23-hour expired yesterday also. Okay. This was the 4 p.m. candle, the 4 to 5 p.m. candle. Okay. After this higher low had been made in the London session and finished in the afternoon session, right? So you still see that the 23-hour is at a higher low. Last time the 23-hour made a higher low, it came up, it made only a lower high. Okay. Now again, higher lows to lower highs to higher lows, consolidation. So this market right here is clearly telling you that it's still consolidating, some upper level consolidation between the last low and the last high. Okay, so this clear consolidation on the upper end. So I'm not expecting the price to come down further from here. Okay. The other thing that I looked at, and this goes back to the point that I've been making all of, however long, that you need to analyze more than you actually trade. Here's the thing that I realized also when doing some analysis this morning. When I looked at my 2 hour, for example, and I go back, remember, I told you guys my fibs, I always draw my fibs from my low to my high, my last low to my last high. Okay, so which means all of these lows and highs, these are not what I'm drawing my fibs on, because these were all completed moves. Lower low to high, complete. High to low, complete. Okay, low to high, that's my last move. Okay, here you have a higher high to a low, but I'm not sure if this low is finished, because this is now a retracement of this last low to last high. Then you have a higher low to a higher high, which means that you have a complete trend move right here. So the market is trending right here. Okay. And if I apply my my moving average indicators, you will see what I'm talking about. So if you look at the Williams alligator, okay, so if you look right here, low to high, higher low to higher high, this market is trending. Notice it crossed right here, and then now you're trending in a bullish direction. So this is trending. Okay. Now, yes, you have a cross here, and this shows you that this market is trending here. But in order for you to have a trending market, what I need after this initial break of structure is for me to get my first confirmation in the form of a lower high. Then I need to get a lower low breaking this level to confirm that I'm in a bearish trend on this particular time frame. So this doesn't tell me that the market is bearish, because the price can always go from here, shoot all the way back up here, and then all of a sudden I'm back in a bullish structure. All right, so those are the things that I need to look at. The final thing that I wanted to add to you, and I mentioned this previously, if you guys have not seen the video that I made on how to set up your fibs, on how to read your fibs, please go and search it on my YouTube videos. I have it there in the libraries for a reason. It's a good resource to help you. So again, I drew my fibs from here, from my low to high, my low to my high point. Okay, not here to here. I drew it from my low to my high point. Okay, notice what price did. Price came back down to the 38%. It touched on 38%, and we know that when price interacts with 38%, it either bounces up or it continues down very hard, one way or another. Now look at what it did. It bounced on my 38% line here, and it shot right up to make a higher high by breaking the first expansion level, which is at minus 27%. Okay, and then from here, it came all the way down and did a hard retracement, which is what we saw completed yesterday. Now, here's the key. Remember, the key retracement levels on the fibs for US 30 and the NASDAQ 100 are either the 61.8% or the 78.6%. With this retracement here, after I drew from my low to my high, okay, retracement came down and it touched right on my 61.8% line. It touched it, and also it did a retracement, slight retracement from here. So it finished above my 61.8% line. And that was at the end of the yearly candle, the monthly candle, the daily candle, and every other candle in between. Every single candle finished right here yesterday at this retracement point. Now, how does that play out on the other time frames? Well, let's look. So if you look at the 1 hour, this is where we are. Where we are. This was the lowest point. This is the 4 p.m. candle. All right, finished above. You look at your 50-minute, same scenario. Wicked out, came up, finished right here. Okay, 45-minute, same scenario. 30-minute, same scenario. Everything finished above this point right here, which is my 330 point. 15 minute, same scenario. If you go all the way down to your 1 minute, look at what happened here. The 3 o'clock hour, 3:59 p.m. That was the lowest point that was made yesterday in the market. And ever since then, we made a higher low. So you're still making higher lows to lower highs, which means you still have that consolidation that's happening on your lowest level for the day. Okay, so that's important. That's what I saw yesterday that I'm looking at. So from the 61.8%, I expect price to come back. If it makes a lower high, still consolidating in between this range right here. If it makes a lower high, then fine. I'll take my profits and I'll go. All right. And I'll just wait again. So remember, this was the entry that I told you I took yesterday. Okay. It's in the red, obviously. Okay. I added another entry. It's also in the red. But again, I did not over leverage. So I'm not worried about that trade because I know the market will actually go back and be in trend. All right. So if it bounces from the 61.8%, which I've seen it do so many times, especially when you have a hard retracement like this, okay, expect it to come up, break minus 27%, okay, and if it breaks minus 27%, expect it to go to 61.8%, which is actually just above my TP1 level. These other TPs here, definitely these will be broken. At some point in time, these will be broken. So I'm not worried about that. All right. So definitely this is what I'm looking at here. Market finished at the 61.8% retracement level. It's a very good level for me. Let me take some of these things off. I'm going to take my fibs off. I just left it there so you could actually see it. Okay. So that is what I'm looking at. This low came down, it took out this higher low, finished above this new low right here. That's a good sign. Okay. You look at all your other time frames. You look at your 3 hour, everything is at a higher low. Everything is at a higher low, higher low, higher low, all the way up. So I'm expecting these consolidation levels that I'm seeing here, which is normal. That's a good thing because again, look at this. You have a W, potential W forming right here. So you have 1, 2, 3, 4, and then the last leg of the W is going to clear all of these highs. So that's why I'm confident about these take profit areas. Will they happen in the next couple of weeks? Probably not. We don't know. Okay. But just so you know, every single high on the US 30 will get broken. Last thing I want to touch on briefly, as it relates to analyzing more than you trade. So I'm done with this. So let me take this fibs off right now. So I keep a clean chart. So that's off. Just leave the rest of my lines right there. But there's something that I did that I really wanted to point out to you as it relates to analysis. Now, I did a yearly summary of what the US 30 has been doing for the past 6 years. Okay. Now, what you'll notice here is from 2020 all the way up until the end of 2025, which was yesterday, this has been the movement for the US 30. Okay. Now, I don't need to convince or argue with anybody as to whether or not this instrument is bullish. If you can't see this from this data that's given to you, then trading is not for you. Okay. So look at this. This was 2020. This was 2021. This was 2022, and so on. Here we are at 2025. Okay. Bullish instrument. Now look at how 2025 finished. And let me just take this off right here. You notice this is not a bearish candle. This is a bullish candle right here. Yes, you had a pullback. And remember, I said in, I think on my live that I did on my YouTube, I mentioned to you that the sell that we're seeing is just to create the monthly wick. And that's exactly what we saw right here. The market, it did not finish bearish. It finished bullish. So let me put these things back. Now, if you notice, I mentioned to you every single time a higher high is made, it has to come from a higher low. Has to. Okay? So which means after a higher high, you should have a higher low. And you must have a higher low if you're continuing the trend. Okay? Same thing here. All right? Higher low, higher high. Higher low, higher high. Okay. But here's what I want you guys to understand and why this market is not ready to be sold as yet. Every single time that a higher low was made on a monthly time frame, notice that it started when the monthly was already showing signs of being bearish. So you had a red candle. And if you break this red candle down, you'll see that you will have weeks of bearish activity before continuing to make this higher low. So let's do that. Don't take my word for it. So let's go here. All right. So let's look at some of the smaller time frames. Let's look at the 2 hour. There you go. You have bearish activity before actually getting to continue to make that higher low. So the market was already bearish. Okay. Now, which means if you notice, and like I mentioned to you earlier in the video, not that it made the first new low. You had confirmation. So you had a new low, then you had a lower high, then you had a lower low. Let's make this bigger so you can see. Here we go. All right. So here we go. We had a low, then we had a lower high, then a lower low. Then you had continuation, lower high, lower low, lower high, lower low. Okay. All right. So you had that confirmation, not just the first move, because look at what the market did right here. Okay. And this was actually in November of 2024. It moved from a higher high to a low. Okay. And instead of going lower high, lower low, it went right back up and made a new high before it started to go down. All right. So that's why we need to be careful of that. So going back to the monthly, and what I wanted to show you was, here we are. Every time when you have that higher low to be created, it always starts with bearish activity. So you had a red candle that finished off December right here, continued to the higher low. Okay, look at this point here again, next higher low. Here we go. You had a market that actually had bearish activity before continuing down. So this was here. Let us go and just put the cursor here so you can see it. So we go here. So let's look at the 2 hour. Here we go on the 2 hour again. All right. You have lower highs, lower lows being made, lower highs, lower lows. This high that was made is lower than all of these highs that were made up here. So you have bearish activity before the move continued to go down to make that that higher low on the monthly time frame. Now here's something else that I want to show you real quick, and this is the beauty of analysis, guys. Don't be afraid to analyze more than you trade. You will be better for it, trust me. So we go here. So let's look at the candle, the December candle that finished. Notice it finished green. Okay. However, look at the difference. When you look at that candle that finished on the 31st, let's look at the daily, for example. Notice the daily is coming from a higher high. Okay, let's look at the 2 hour. The 2 hour actually came down, it made a higher low. Then it tried to go up to make a higher high, but it finished at a lower high. Okay, and this was December 31. And let's just move this here so we can get it accurate. All right, and move this over so we can get the accurate measurements. Okay, so here we go. December 31. This was already bearish. Okay, This was already bearish because it went up, made an all-time high, came down, made a higher low, which means it's going to try and go up and break to make another all-time high. Instead, what you got was you got a lower high. Okay, that tells you that the market is bearish. Okay, right there. And if you go back and watch the videos, I think I did a diagram showing you how you identify an interruption in structure and a possible retracement. All right, so you can go back and review those videos. All right, so let's come back out of this and go back on the monthly, because I don't want you to miss this, guys. This is real good stuff right here. All right, so here we are in the monthly. So if you notice, started showing bearish signs before continuing. Same thing here. This finished at a high point. All right, but even so, after that, notice what the price did. It made that high before starting to go down again to complete that higher low. Same thing back in 2020. Similar situation right here. Price finished at a high. Of course, it bought up for a little bit until about February, and then it started to drop. And it only dropped. It made a new low, but it's still a higher low in relation to all the other lows that happened before. All right. So that is one of the reasons why I'm confident that the market will continue to the next all-time high before we see any signs of selling. So the market opening at 6 o'clock this evening, those of you who think that you are somehow in a bear market before, sorry for you guys. Remember, the Santa Claus rally carries through to the first week of January. It's not just December. Okay, so Christmas is not done yet. All right, so please trade wisely, trade smartly. I really just wanted to take the time just to point those things out to you because of the situation that we had this year, where the monthly candles and all the other candles expired, leaving only the weekly, which has one full trading day tomorrow to actually finish the yearly cycle. So be wise, guys. Don't go into trades blindly. Wait for your higher lows and buy from your higher lows to your higher highs. If you want to sell a retracement, make sure you're selling from your higher highs and make sure you have that bearish confirmation before going in. Otherwise, you're going to get trapped. All right. So again, looking at this, guys, this is the monthly, largest time frame. Higher lows to higher highs are always guaranteed as long as you buy from your largest higher low. That's it. Never fails. So thank you guys again for watching. Again, Happy New Year. May 2026 be the best trading year of your experience. Please, please, please practice to analyze more than you trade, and you will see the difference. Thank you guys again for watching. I will see you on the weekend. Just a heads up, on the weekend, I may be, my schedule may be a little bit interrupted because I got some family events to take care of. So the analysis and the review video may not come, but I'm going to try my best. And that's why I kind of made this one a little bit longer, so you can actually get the content and you have enough data to actually make these important decisions going into 2026. So thank you guys again for your support. Thank you guys for watching. Please remember to like, share, and subscribe. And also remember, I'm going to be trying to do live trading sessions on a daily basis to kind of help those who are interested in getting more tools to help them to be more patient. So thanks again, guys, and I will see you. God, thank you again for your blessing. Thank you again for your goodness. Thank you again for a new year, new opportunities. We just thank you for all the new knowledge that we're going to be getting for 2026 that will help us in our trading. With anyone watching this video, may we all succeed together. We thank you and we love you. Amen. All right, guys, take care. Have a wonderful day. Enjoy the rest of your new year, and all the best for 2026. Bye-bye.